Good evening. Welcome to our viewers. Today, our regular host is unavailable. Just to let you know that the Guyana Dialogue is being sponsored by a group of Guyanese located in the United States, Canada, the United Kingdom, the Caribbean, and in Guyana. Welcome. Today, we have a very interesting conversation with a well-known, a popular financial analyst in Guyana, Mr. Joel Bhagwandin, who will tell us or have a discussion on our debt situation. This has raised a lot of concern in Guyana, where people are claiming the Guyana government is taking out too much debt. And the other issue that has been in the news quite recently is the state of the sugar industry in Guyana. Now, before let's introduce our guest speaker, Mr. Joel Bhagwandin, and then our other panelists, Dr. Ganga Ramdas. Unfortunately, Professor Muniram Budu could have not been here today for this event. So welcome all, and I just want to make some quick announcements really before we start. I want to congratulate the Guyana Consul General, the Ambassador Michael Broderson, and Guyana's permanent representative to the United Nations, Caroline Rodriguez Burkett, and their staff for putting on a beautiful reception in honor of Guyana's 59th anniversary at the Jamaica Art Center last night. The main theme of that conference was reflection and gratitude. Both the speakers, Ambassador Maud Broderson and Caroline Rodriguez, emphasized the need for maintain Guyana's sovereignty and territorial integrity, and they also related some of the major achievements, accomplishments of the PEP government in Guyana. Also, we want to congratulate the National Tushao for having their what appears to be a successful conference at the National Convention Center in Georgetown. And one piece of news that has brought some relief to Guyanese, especially in the diaspora, is the American ambassador states that the U.S. will support Guyana to defend its border. Although they mentioned specifically in the Cuyuna River, but I think it's broader than that. So we want to thank the U.S. ambassador and the U.S. government for siding with Guyana on this. Now, and finally, it's not clear if Maduro, what he will do when he conducts his election to elect the governor of Ezequiel. We know that it's fictitious, fraudulent, etc. Now, that's by way of announcement, but let's start first with the sugar industry. I know that has been, and I just want, there has been a lot of criticism of the management of Gaisuku, etc. And I don't think they really did an objective analysis. I know Joel has done an article on that, which was published, I believe, yesterday. And Gaisuku also issued a press release where they indicated that one of the major challenges was the bad weather, that 51% of the crop time in the forest crop was really described as wet. But it did say that Iflat Sugar Estate received its quarter target it exceeded it by 17,000 metric tons. So that's good. The Boris estates did not receive the short because they had a much higher level of rainfall, etc. Now, let's go to Joel now to give us his state, his analysis of the sugar industry, the state of the sugar industry for this half, and then the other half we'll go into the budget. So, Joel, welcome. I know you're busy, and thank you for appearing on our program again. So, go ahead and
Good evening, Dr. Tara Singh. Good evening to Dr. Gangaram Das, and of course, good evening to the viewers. Thank you for having me here once again. It's always a pleasure to be here on this platform to discuss these very critical issues of national importance. Now, on the question of the sugar industry and the current state of the sugar industry, I would like to frame my response to that question within the environment, within the current environment of so called debate in the public space, coming particularly from, sorry about that. Yeah, coming specifically from the opposition aligned quarters, whereby I saw a few letters and a few commentaries critiquing the government's stewardship of the sugar industry, showing figures comparing one particular letter writer compared the performance in the APNU period, that's the 2015 to 2020 period, and the 2021 to 2024 and 2025 projected. And they're saying that, listen, the government should not be blaming the APNU AFC or place the blame on them for the poor performance in terms of the heavy reduction in terms of output that they promise to reopen the sugar estates and what is happening now. So, like I said in in my response to that, or in my contribution to that debate, is that it is always easy to destroy things, but it is very difficult, costly, and time consuming to build things and to rebuild things. Now, if you look at the data that is publicly available, published in the Isuku annual report, from the time the government, the PPPC administration, resumed office in 2020 when they were elected, work began almost immediately to reopen those estates. But we tend to forget that it was four estates that were closed down by the APNU FC: Wales, Rose Hall, Skeldon, and East Demerara. Four estates they closed. When, yes, the PPPC administration campaigned and said that they're going to reopen these estates, some of them could not have been reopened, practically speaking. For example, the Wales estate was virtually impossible to reopen. So the government came up with an alternative economic development plan for that region, for that part of the country. And the only estates that were reopened were Rose Hall and Skeldon. And in reopening those estates that were shut down, it took time to get them back into production because it takes time to rehire the people. It takes time and resources, financial resources, to prepare the land. You had the land were covered in bushes. You had a lot of work to do to. It's not like when you're in the normal course of product cultivation as soon as you finish a crop, you prepare for the next crop. It was not a case of that because these estates were down for a long period of time. So you had to go back and clear these land. It's a heavy cost burden and cultivate the land before it get into production. So when you look at the production statistics, Rose Hall started to produce somewhere in 2022, 2021, 2022. Skeldon in 2024, which is last year, the president announced that they're preparing an additional 5,000 hectares of land for cultivation. So up to 2022 and 2023, Skeldon was not producing as yet. So that is the situation, and that is the reality, and hence the outturn that we have today. When you look at 2015 statistics, when you look at 2015 production data, the in 2022 you had about three times less uh, sugarcane that was harvested, three times less, which resulted in an output of about 4.4 times less than the output produced in 2015. And that is simply because you have, of the four estates that were closed, two were reopened, so you have less resources that were cultivated, less land that was cultivated. And because I would suspect that, and it's reasonable to presume that because these land were down for a period of time, they lost their yield. Because when you look at the yield per hectare in 2015, it was almost an average of 5 metric tons per hectare. And based on the numbers that I look at in 2022, we're getting about 3 tons, 3 tons, 3 metric tons per hectare. So that's the current state, and that is the reality, and that is the fact of the matter. What has really resulted in the lower output compared to when the industry was not reorganized. Well, that's the terminology that the APNU would like to use, but really they shut down the industry, they killed the industry, right?
Okay. Um, According to Guy Suku, they said for the first crop they couldn't harvest 225,000 metric tons of cane. That would have been converted to about 18,000 raw sugar, 18,000 tons of raw sugar. Um, they're still working to see if they can, as much as possible before they can die like that and rot, they're still working to see what they can recover from that 225,000. The the other thing is the sugar you mentioned about these about whales. I'm not too. When you say Skellin was open, you mean the cane fields are open to cultivation, but the factory is still closed. Am I right there?
The factory is um, well, I'm not sure if the factory will be processing the sugar,
I doubt
but
whether
I
the
know
factory.
the factory is doing some other
Yeah,
um,
I doubt
is
whether
in
the factory.
operation there. Yeah, Skeldon
Whether the
Energy. Yeah.
factory. Are you aware that the one of the initial plan was to industrial hemp to allocate much of the land in Scotland to the cultivation of industrial hemp?
I know Region 6 and Region 10 are the regions that are identified for hemp cultivation. I'm not sure if it is those land. Maybe it is.
Mm,
Maybe it is alternate uses.
okay, we can proceed for the, but Dr. Ganga, you have any comments to make at this preliminary stage?
Of course, I took a broad view of the production statistics between 2009 to 2024. And in management theory, we have something called poison pill. When I looked at the data, what happened corresponds to that management theory that the poison pill was administered to the entire industry. Production fell from in 2009 from 233,000 tons, metric tons. It dropped to 2019 to 92,000 tons. And then 2020, pretty close, 87,000 metric tons. And in 2024, 47,000 metric tons. So when you look at the entire period, uh, production declined continually. Now, this brings me to a solution to the problem, and that involves conversion in terms of land use, conversion, distribution to small farmers like the polders, blackbush, canal polders, and so on, and diversification. So conversion and diversification, rezone, and then put the land to a diversified use. You mentioned commercial hemp, that could be one of the crops, but there is no reason why it should be commercial. It can be divested in favor of small farmers or peasant farmers or family, preferably the family farm model could be used. So those are my comments. It's unfortunate that we're witnessing this, but there is potential. But you need to combine the lands with people, and that will unravel and give experience and exposure to true farmers, and they will stay on the land. If we don't give land to the people, we will also lose our people. We need to anchor our people, a stable anchor through farms, through land use, land ownership, and we should. Those are my thoughts on the matter.
Okay, but let me just point out here that the government has embarked upon an aggressive program to give land ownership, housing, etc., to various people. Now, what I don't get, are you saying that they should contract the sugar industry? Sugar, as you know, the demand for sugar from 2019 to 2024 has increased worldwide by 9% annually. So the demand for sugar is always be there. And the question is, how do we increase the acreage, the number of hectares under cultivation, how we increase productivity, introduce better yielding crops, etc. And I I wouldn't want to say that we should well, diversify is good, but I don't believe you're saying that we should contract that, make any deliberate attempt to reduce, because if you give land a substantial number acreage of land is already given for housing development, a substantial, and some has been sold by the PNC, especially in Wales. And Wales, they're doing a massive housing scheme there, where over 4,800 something house lots are being allocated. So they are moving in that direction. Plus, through the Attorney General chambers, they are giving titles to lands that people had owned for years, or was not owned, had occupied for years, but they have titles. So that run into thousands of titles as well. So they are moving gradually in that. But let's go back to the sugar. I mean, you mentioned a reduction in production, which is right, but Joel just pointed out about the four estates being closed, and therefore they will not be in production. So you really can't make a meaningful comparison between them because the structure and the variables are incompatible. You can't compare them really because they had four more sugar estates, and then during in 20 16, 2017, they closed four estates. So, and
Yeah.
the key to it is, as Guy Suko has faced, as Joel has mentioned, obsolescence, a lot of equipment that's the PNC really had the sugar industry in life support. So the PP had to come and get them out of life support. It would take some a long time to get this. But giving subsidies about $6 billion a year to the sugar industry is worth it. Per capita, per capita, per capita, bauxite get a higher per capita worker subsidy than sugar, and that is being missed by people. They're not talking about bauxite about 4 billion a year. Gaisuku get about 6 billion, but Gaisuku workforce is about 12,000. Um, Sugar worker, the bauxite workers, I don't know, is about 1,500 or 2,000. So let us
Yeah.
go on.
Yeah. The
And
bottom. I
I,
another
just.
point, Dr. Ganga,
yeah,
let us has been
what Joel has described is correct. I don't have a problem with that. I'm looking towards sustainability of the land use of the land itself. Um, you mentioned houses and house lots. I'm not looking at houses. We have enough land for houses and house lot. I'm
The,
looking at a model of development which includes homestead and farms, homestead plus farms. In Blackbush Polder, they had 2 acres for homestead and 10 acres
Mhm.
for farms. I
Yeah,
discussed that with Chedi Jagan,
I,
and he said
yeah.
yes. The Canadian optimum is 15 acres. So
I
I'm looking at this size of small farms throughout the country for the Guyanese people and the peoples and their offsprings who worked on the sugar plantations. They should be given some ownership. That would
yeah.
stabilize the population size, and this is essential for transformation and development. We
mhm.
have to ground the population of Guyanese whose sweat is in the land, in the sugar estate lands. Otherwise, we're going to lose people, plus, we're going to lose the land. This is my opinion on that. So,
Yeah,
small farming is the direction to go, and we have to look towards homestead and farm sizes.
yeah. Well, that's one. Well, first of all, the sugar company has to decide how much hectares they really need to cultivate. What's the optimum, and beyond that, that possibly. But as far as I know, most of the sugar estate land that are not being used has already been allocated for either housing or some other. But we'll go into that. Let's go back
Yeah.
to
I think Dr. Ramdas is shifting a bit away from the topic.
yeah.
The issues that Dr. Ramdas' points that he's raising are, to my mind, those are separate matters, not necessarily related to the sugar industry. What we're talking about tonight, and his interjection in making those points. I just want to say in response that with respect to distribution of land for various uses, industrial, housing, residential, commercial, and agriculture, the government has a comprehensive policy, and the government has been distributing aggressively, making more and more agricultural lands available to promote exactly what he's been talking about. Um, Commercializing agriculture, moving away, in terms of trying to transform the agriculture sector from just farming to an enterprise, right? And there's a lot of work being done in that sector. So it is not being one is not being sacrificed for the other. One is not being sacrificed for the other. The question here, the subject for tonight here, with respect to the sugar industry, is that the fact of the matter is that you cannot expect to have the same level of output that we had in 2015 before the closure of these four estates in 2025, because simply put, we are cultivating less land, we're cultivating less sugarcane, 3 times less, and hence we're getting at least 4 times less output in terms of yield per hectare. And I want to also make another important point as we're talking about Skeldon. And there's a valid point he made about the decline in sugar production, the output of sugar over the years from 2009, before the estates were closed, before the APNU AFC destruction of the industry. And what I want to point to is that there was a feasibility study that was done by Booker Tate that led to the development of Skeldon, led to the birth of Skeldon. The feasibility that they had done was, the findings of that was that sugar cultivation, sugarcane cultivation should move towards the east, because the land towards the east is more fertile, and therefore the study shows that you're expected to get higher yield per acre. And so there's a comprehensive study done. And so Bukatit was then contracted by the government of Guyana, which was the PPPC government at the time, to design a project which was later called the Skeldon Sugar Factory Project. Design it. They were in charge of design. They were in charge of approving the design. They were in charge of administering the tendering process in the selection of a contractor. And they selected the Chinese contractor over the Indians that built the Skeldon Sugar Estate. And they were in charge of supervision of the development of that project. Now, I'm mentioning this because this is something that I have personally studied to really understand the facts and to bring the facts to light. Because what I found when I did that study, I've never heard about that before in the public domain. For many, many years, we heard one man getting the blame for the failure of the Skeldon. But the facts are to the contrary. What we found is that Booker Tate, who was contracted for that project, they were the one who breached the contract. There were multiple breaches, from the design that was flawed, from the poor supervision, and ultimately, because of that, that led to the fallout between Booker Tate and the government of Guyana, the PPPC government, that
Uh,
is. They ended up in court. They ended up in court. I'm going to cut the story because it's important that come to the conclusion. They ended up in court. By the time they end up in court and file an appeal to sue Booker Tate for the failure of Skeldon to the tune of over $4 billion, guess who came into power by then? The APNU AFC came into power by then. Booker Tate's lawyer, attorney was Nigel Hughes, and the case was withdrawn. The case was
uh,
withdrawn from the appeal court. So
there,
we did get away without any liability to the state, leaving the state in that mess, and they're gone for $4 billion unpaid that they're liable and accountable for. So I just wanted to to make that point with respect to
Okay.
Skeldon.
Okay. The what we want to move on to the budget just now, but what suggestions you have, or what you think Gaisuku should implement? What policy? So far, they said 40% of the cane is now mechanical. They can harvest them mechanically, etc. Do you think that should expand to 60%, 80%, or what? but
So
you got to do a balance between labor. You can't just place them on labor too. Your views on that? And what about? I believe they have some technical people down there from Guatemala or somewhere are looking at productivity levels, like better yields, etc. Have your comments on that? And then we
yeah.
pass. Mm,
So while I am no engineer, neither am I an agronomist. I'm a financial
mm,
analyst. So I respond to that question from a financial and economic standpoint and from a business standpoint.
mm,
Is that they have to essentially make the entity profitable. They have to find ways to minimize the cost. But to minimize the cost, it would require, it therefore means if you have, as you mentioned earlier, obsolete equipment, old assets, old machinery, it would be very costly to continue to maintain them. So it would require a considerable amount of capital investment to uh, get the estate to run at a lower cost. And then that's on the engineering side. So I would imagine there would be considerable capital investment, which I don't know what are the plans internally, what's the strategy in that regard. And then of course you have the agronomists, the agricultural scientists to
mm,
look at the different types of keying, how and
mm,
in terms of how to increase the productivity and how to get better yield so that you could get
mm,
higher yield per acre and
mm,
lower cost essentially. So how do you make the operate the business model
mm,
more efficient and cost
mm,
efficient and cost effective,
mm.
right?
Okay. Dr. Ganga, your final point before we go on to the
Again,
next.
I'm taking a broad view. Booker Tate was contracted in 1990, and the Skeldon plant modernization effort was in 2004. In that effort, uh, there was power generation included in the modernization. Uh, a distillery was earmarked, and there was also a refinery. So my question is, what describe what happens or what's the status of these initiatives? The power generation, 25 megawatt power, the distillery and the refinery. What survives since 2004?
Sorry, I didn't get you in it. What are we talking about? You're talking about Skeldon?
Scaling, yeah.
Yes.
Oh, I won't be able to say what's the current
They
status.
had the power generation was functional, but then I believe they stopped it after a while because it was cheaper to get electricity from the main grid. But that's something we got to verify. And as a distillery, I don't think that
You have to
I
invite the
know.
CEO to answer those questions,
Yeah.
Paul Shaw.
All right. The your final thoughts. Sugar. The market for sugar is expanding. Right now, we even can't supply the Caribbean appetite for sugar. Um, so, your thoughts, sugar has a future, sugar is there to stay, is integrally linked to our history, our culture, our lifestyle. You know, sugar community is the base of much of what happened afterwards of improving education, etc., etc. What How do you see the future of the sugar industry?
From a high level standpoint, if as a matter of policy that, and for all those reasons that you mentioned, that we intend to keep, this has to be a strategic policy decision at the top of the executive level, whether we're going to keep sugar or whether we're going to eventually phase it out. The policy at this moment, from all indication, is that we wanted to keep the sugar industry alive. There is no indication that we want to get rid of sugar or phase out sugar. And so, if that is the direction in which we want to take the sugar industry, and knowing all that we know in terms of the current state, all of the challenges and the amount of investment
mm,
required, etc., then the what comes to mind then if we're going to take the industry forward, we got to attract investors. We got to bring in some investors to put money into the industry, bring in people, whether the Brazilians, because they're good at this, they're very good in this industry. So too are the Indians. Whether we're going to identify, present a package to attract some investors to invest in the industry and to chart and to keep the industry alive for the future. Because
you're talking about joint ventures.
regardless of what model, we can't
Mm,
determine the model now.
mm,
I can't. We could have many different models, but first we have to ascertain whether the industry is attractive enough. Now, when what I suspect the government is doing, which is the logical thing to do, or the sensible thing to do.
mm,
If you want to make the industry or to keep the industry, and we know that we have to bring in investors, you first have to make the industry attractive. Now, when you bring investors here and you show them whales that Bush is taking over, right? No investor is going to come to invest in the sugar industry. So that is why the government has to invest in the industry to bring the industry up to a level of production, a level of production, productivity, and profitability, at which point it would be attractive enough so that we can now start to talk to investors. Investors would now see, okay, we have something here. And then we're talking here futuristically, long term. We're talking long term for the industry, right? Because I
mm,
don't think we have, with all the challenges that we have for decades, for decades, I don't think we have locally on our own what it takes to really modernize the industry and to really uh, bring it at a place that where it is profitable and
mm.
sustainable. We have to bring in foreign experts, foreign investors.
Okay, thank you. Yeah, we have. I know this. We could have. This is a topic that needs much more time than is allocated for it. But let's go on to the other. There has been great concern about Guyana taking too much, borrowing too much money to pay for development and other projects. So let's hear your views on that. And do you think people have, is there any justification for people to be anxious about the level of debt the country is incurring?
Now, the views of that nature, if I'm to give an analogy, if you have assets, let's think of a household level. This is how the type of of analysis, if at all, any level of analysis that informs the view by those who propagate that we have a high level of debt and we're borrowing too much, and presenting this picture, trying to create an image that we have excessive borrowing and therefore we have to worry about the future whether we could repay those debt. Now, if you have a home that 5 years ago only worth maybe $1 million, and your income was $1,000, and your debt was $10,000, and or $900,000 if your home value $1 million, and your debt is $900,000, and your income is $1,000 and your repayment is $500, then you have a problem because you're using 50% of your income to service the debt, which is collateralized by an asset that you own valued $1 million, and your debt is $900,000. If you're in that situation, you're in trouble. But we were in such a situation, in a worse situation than this 3 decades ago. We were in such a situation. We came out of that. And where we are now, we're in a situation where the home is valued 100 million. Our income, our debt now is maybe 10 million, 10 million covered by an asset with a value of 100 million. And our debt service remains, let's say it has gone up to $1,000, but our income has gone up 10 times. Our income has gone up 10 times. So we're using less than 50% of our income to service that debt. We're using less than 10% of our income, non oil revenue, to service that debt. And the value of our asset that generates this income is 100 times over. Now, I'm using this way to explain it. This is the situation you're in. When we talk about debt to GDP ratio of we were one time 900%. Our debt to GDP ratio is now less than 30%. One time our debt service was 150%. Now our debt service to revenue ratio is less than 10%. So there are three levels of risk. Broadly speaking, there are three levels of risk: high level of risk, medium level of risk, and low level of risk. We came out from the high level of risk, we came down to medium level of risk, and now we are in the low level of risk. Low level of risk. When we look at our external indicators, not just debt to GDP ratio and debt service ratio, our external debt, we have enough foreign exchange reserve at in the financial system to repay our total external debt 2 times. We could cover our external debt 2 times with the amount of reserve that we have. This is a historical place that we're in from a macroeconomic stability standpoint, in terms of macroeconomic. When we talk about macroeconomic resilience, there was a time when our reserve was a fraction of our level of debt, couldn't even cover a fraction of our debt. There was a time when we had zero reserve. So I'm giving you a very simplistic, staying away from all of the technical jargon, a simplistic, relatable view of the state of our debt, and the state of the country's finances, public finances.
Okay, Dr. Ganga.
Yeah, well, Joel is describing it as it was. When I look at the where we started from, Guyana's debt to GDP was 600%. So that was a very bad situation. And then that's in the early 1990s, like 1994. And then by 1999, we had a clean slate, debt write off. So we started from there. And then Joel mentioned a good example. I like that example. The income that you have is important to service the debt. So the debt level is not so important. What's most important is the ability to service the debt. So I've been looking at some numbers, and I find that there are some faulty numbers, or it could be explained with facts that I don't have any information on, in order to get the debt to GDP. So that's one indicator or one test. But we need to look at the ability to service the debt. And the ability to service the debt comes from our tax revenues. And if we're going to look at our tax revenues, then it is largely the non oil GDP debt service charges or debt to non-oil GDP should be a relevant measure. And this would answer some of the questions that popped up recently in the press. So we need to look at that carefully. The ability to service, and I'm not including the internal debt because there's another theory on that. We owe that debt to ourselves internally. So that could be explained that way. But the external debt is more important. The debt to the non-oil GDP, because we have to use our tax revenues to service the debt. That's the income stream. And so the big question is that um, the income that we get from oil flows through the NRF, the National Resource Fund, and then it goes to the budget. But when we're measuring the revenues, the tax revenues, it appears that we're including tax revenues from the oil companies in that number. So it's giving some faulty ratios. We have to go back and examine that. So if I want to create a question, the is the NRF and the tax revenue double counted there? That's a very important question. And so I don't know if Joel will have to raise that at higher levels.
Yeah, so it's there is no double counting. So you have different methods of measuring GDP or computing GDP. So we use the production method. When you use the production method, then there is no double counting as you put it, because it's the total value of production in all the sectors, right? So that's the method we use. But I know where you're going with this, and this was what I dealt with. Dr. Former Auditor General Dr. Anand Gulsran made the same argument, and he, along with some other people and yourself, as you just put out the argument, or well, you didn't make an argument, you raised some pertinent questions, and so they, more so than you, making this argument that the number is distorted, that the GDP is misleading, and because of the 87.5% of the oil revenues that they claim does not belong to Guyana, that it goes to the oil companies or it's repatriated. The 75% cost recovery and their share of profit oil. Now, there is textbook theory, there is theoretical argument, and then there is practical argument when you apply these things in terms of your local context. So they look at the GNI versus GDP, gross national income versus GDP. So gross national income equation would exclude or subtract the income earned by foreign companies within the domestic economy. So in other words, you got to take out the oil companies' income, which is exactly the point Dr. Gangaram Das was making, that we're double counting here. Now, even if you do that, the World Bank has adjusted the GNI for Guyana in the latest data that they have in their databases for 2023, which was adjusted downwards to 10.4 billion, and GDP in 2023 was 19 billion. So you have like a 47% thereabout difference or variance. Now, if you take the debt to GNI ratio as of 2023, it's about 49%, and debt to GDP was 27%. So even 49% debt to GNI ratio is not high risk, that is moderate risk. But that aside, I want to make it a little bit more technical here now. The applicability and the suitability of using GNI as a measure versus GDP depends on to what extent the income earned from foreign companies are repatriated to their parent companies abroad. When and to answer that question, you have to do the financial analysis of the oil companies operating in Guyana, specifically the cash flow analysis. And when you look at the cash flow analysis, the cash flow analysis shows that it is in a negative of $134 billion. A negative. That means that the oil companies are reinvesting 100% of their profit in the Guyana economy. 100% of the money. They're not repatriating it to pay a dividend. They're not repatriating to the parent company. And the reason why they are reinvesting is because first oil was discovered in 2015. Exploration began sometime in 1999. Since 1999, they have been investing their money to explore. They made a successful discovery in 2015.
Mm.
They spend their money to develop the resources to move to production. They have to recover that cost. And as they recover that cost, they continue to explore in the Stabroek block and they continue to make discoveries. So the proven reserves has moved from 3 billion in 2015 to over 11 billion in 2025, and they're still exploring until 2027. The exploration license will expire, and Guyana's production has increased exponentially. Forget about total production. Guyana's revenue to the national treasury has increased from 41 billion from the inception from forest oil to 525 billion estimated in 2025. So you have income that we earn from this sector has increased by almost 13 times, and that is to achieve that outcome. It is because the oil companies, this notion about 87.5%, you got to subtract. It's notional. It's a fallacy. It's a misconception because it is not repatriated. The oil companies continue to invest and reinvest the money to develop, to explore at the same time, whilst developing other fields to go into production by 2030, which will move current production from 600,000 barrels per day to 1.3 million barrels and over by 2030. So until then, when those licenses expire, and when production peak at 1.3 million, production start to decline, and there is no more investment and no more exploration in the Stabroek block, then is when you would apply that aspect of the analysis. Then is when the profit share that Guyana will get will go up because the cost oil will come down from 75% to less than 30%. So you have a higher profit share, up from 12.5% of the gross revenue to about 30%, 35% of gross revenue. And then is when the oil company is going to start to repatriate the profit and pay dividend. And then is when they're going to subtract that. But at this present time, the numbers show they continue to reinvest everything 100%. In fact, they are in the negative. They are in the negative, which means they are reinvesting all of the recovered profit, the profit generated here, plus the parent company injecting more equity here too. That is why they're in a negative.
Mm.
And that's my
Uh,
response.
okay, Dr. Kanga, follow up.
Yes, okay. The oil industry situation is as Joel described. I'm looking at the bottom line in terms of Guyana's interests. Guyana's ability to service the debt from taxes is of paramount importance. So, this means that in terms of which measure to use, debt to GDP or debt to gross national income, the debt to GDP is most relevant or is more relevant. The situation with gross national income, it includes all the assets that residents of Guyana own abroad, plus remittances from diaspora to Guyana. That's all included in the gross national income. And so there is a little
Hmm.
broader and
Yeah, but that's a
different.
little bit too theoretical. So let me respond to that. The most important question which you've raised, let me answer it differently, right? Your answer is theoretical. My answer is very different. The ability of the country, the ability and the capacity of the economy to service the debt that it undertakes is dependent on what you use the debt for in the first place. And that is what you have to talk about. If we are borrowing to consume, then we have a problem. We're going to go bankrupt overnight. Because when you borrow to consume, as opposed to production and expanding production and economic diversification, that is what determines the capacity your service. The tax revenue comes from companies engaged in productive activities, production of goods and services. And so you have to create an economy, you have to invest in the economy. You borrow to invest in the capital side of the budget, to expand your infrastructure, to build the infrastructure, to build the bridges, to build the power plants, to open up more land so that you can have more investment in in industrialization, whether we want to go in that direction, in the commercial sector, to expand your service sector. You have to invest in the infrastructure. So you borrow to invest. You borrow to expand the economy. And when you expand the economy, companies will come to invest, companies will earn more, companies will produce more, and in so doing, they pay more taxes, they pay more income, they pay more wages, and and that's how your tax revenue, your
Hmm.
non-oil tax revenue will grow, and that is what determines the capacity to repay the debt. Not GNI and GDP and debt to GDP ratio. It's what you do with the debt, what you do with it to invest in the economy, whether you're eating it out, whether you're consuming it, or whether you're investing to produce more.
Okay, Dr. Ganga, your final thing because we need to program time. So your final comment or question.
Joel is looking at a broad policy horizon. That's okay. What I look at are the results. If you look at the Bank of Guyana annual report, there are measurable results there to guide policymakers. And you have to observe that because that is what counts in the end. Notwithstanding all of those things you mentioned, the infrastructure and so on, social plus economic infrastructure, social plus economic infrastructure, all that's very important. But the end result is measurable, and we have to heed that and make that the guideline, the handrails for policy, so that we can make tweaks as we go along and do the right approaches so that the end results come out as as we expect them. So that's all I'm saying there. Our ability to service debt from taxes, it's the engine of growth that you have just outlined there. All those efforts to produce an engine of growth, to deliver taxes, to pay debt interest. You see, so that's the sequence that we have to follow. So as a matter of public policy, practical policy, and this doesn't have to do with which political party is in there. They all have to observe the practical end result of given all the initiatives that you've just outlined. So those are
Hmm.
my parting comments. Joel has
Yeah,
done okay to outline the initiatives,
yeah.
but I tend, unfortunately, to look at the end result as well.
Hmm. Yeah,
So
well, it's time flies by very, very fast. Both areas, the sugar industry and the debt ratio, are critical, but we don't have enough time. 1 hour. We try our best to articulate our views and try to make it as simple as possible for the public to understand. So, Joel, we want to thank you very much. But before we close, we'd like you to do a quick summary of the sugar industry and the debt service ratio. You can take 2 3 minutes to do a brief summary.
All right. Before I do this summary, let me just respond to a question I see in the comment there quickly.
Yeah, yeah, go ahead.
Somebody posed disappointed that the panel knows not of whether hemp is cultivated now or in the future at Skeldon. No, what I said is that hemp cultivation is currently not being undertaken. The question asked was whether the land in Skeldon are identified, whether any
Mm,
land there is identified for hemp cultivation. I don't know specifically, but I know Region 6 was identified. And with
mm,
respect to cultivation of hemp, that has not commenced as yet. Um, but I'm aware that it is the policy of the government. It is on the government's agenda to
yeah,
issue the licenses, get the board in place, etc.
it's
That can commence.
they
Very
have they have the board already established.
Yeah, yeah. So
Okay,
we can expect that process should commence shortly
yeah,
to licensing and then moving to cultivation soon, right?
yeah,
So
go ahead.
summary, a quick summary: the current state of the sugar industry is because of the closure of the four estates. Two have been reopened, and as a result of that, we have less sugarcane being cultivated, three times less, which is giving rise to a yield per hectare of four times less than where the industry was in terms of output in 2015. That is the current state. With respect to our debt service and debt sustainability indicators, we are in the low risk. All of our indicators are sound and solid within the low risk range. Um, we 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 are able. Those indicators suggest that the economy could resiliently withstand external shocks, such as, for example, price volatility, commodity prices, oil prices. If you have an oil price shock, we could withstand those type of external shocks. That's the level of resilience we have. Our debt service capacity are the best in history. Our own
Mm.
economic history coming down from 150% to less than 10% of our revenue being used to service debt.
Okay, thank you very much, Dr. Ganga. You want to make a closing remark?
I think Guyana is on a strong foothold to sustain its development efforts. I have no doubt about that. And it's all the initiatives and the fruits of all the initiatives added together can put us there. We just have to have the guardrails for policy and conceptually to use them correctly and to have good data in order to measure the outcomes of all the efforts that are put into development. And I think the government has done excellent in this regard, as Joel has outlined. Okay.
All right, thank you very much, Dr. Ganga. And Joel, I want to thank you very much for your excellent presentation, and you have been able to reach the audience in very simple, non-technical language, which is very excellent. And once again, I want to thank you or our technician behind Asif Ali. We thank you, and we'll get you back because we need. I think we need more discussion in the sugar industry in particular because there are lots of people who want the industry to be closed, especially people from the opposition, because they feel that's the backbone of the PP support. That is weird. And they feel if they destroy the sugar industry, they can destroy the PPP. That's the theory. And so we should really have another session on that. So we
Yeah,
want to thank.
we have to think sugar, molasses, and dairy, from feeding mules to feeding cows.
Mhm. Okay, so thank you, and good night, and good night to our viewers. Until next Thursday again, greeting.
Good night.
Good
Good
night.
night, Dr.